All right. Good morning to everybody. Welcome to another Engineering the Markets. My name is Jared, and it is December 21st, 2021. What a week it's been. We've just started the week, and we've already seen the market gapping into sort of our preliminary range-bound support. We're seeing a lot of volatility short term with the market gapping higher and lower on after hour sessions. And as we prepare for a short end of the week, we often want to pause and sort of see what sort of performance the market has been giving us as short term traders and also as investors as we prepare for a new year inside of the equities market. When we look at the SPY, the range-bound trading has become more and more evident. This is an idea that markets are not often in periods of transition, essentially trending to the top side. They often will find moments of balance, and these balance ranges are indicative of low to high trading, along with sort of a key indication of where risk lies in the market. Obviously, with a bullish and bearish tone, you want to be a bear close to your resistance points in these ranges. And as a bull, you want to try and defend key supports with the understanding that ranges can be both accumulative and distributive. Understand that if we were to lose one of these momentary support or resistance zones, the market does have upper and lower bound targets ahead of it. But for the time being, we do remain in this range. And just to show the time frame, I'm going to pull us back into October of this year and simply mark the 21st. So I'm capturing about a 2-month range inside of the S&Ps. I'm looking at about an hour aggregation for the candle structure. And you can see that the market really hasn't done anything over this past 2 months. Essentially, if you bought the S&Ps on October 21st, closed your eyes for 2 months and came back today, you'll be up approximately 1 to 2% as we have our sort of gap up in the morning. So as traders, this is important for us to acknowledge. The market has not been bullish or bearish over these periods. We've simply seen the high to low bound trading. And when we look at ranges, one of the key studies that we often like to bring up is volume profile. Where has the larger transactional sets been occurring? Now, Friday, we did have an option expiry, so that did place a bit of relevance for the S&Ps on Friday's trading range. You can see the sort of overall chop that occurred on Friday that left us with a bit of a volume shelf in the volume profile over the past couple of months. But more importantly, where is VPOC? We see that VPOC is much higher from our current location. And what this shows is that over the past couple of months, there's been a lot more transactions occurring above the current price levels, approximately 468 in the SPY. Now, as the market has risen into this upper zone, we've seen larger rejections. We've seen failed expansions near the highs. And as I've marked sort of this clear upper bound of our range, any attempt to breach this area has often failed, not only significantly near the highs, but also providing much more downside in the market, essentially traversing the entire range. So as traders, what we can do is sort of step into some of these trades with the assumption that ranges are going to hold until they don't. The idea very simply being that if you're a more aggressive bull, you should be looking at these lower bound supports as opportunities for essentially range support trades. And these range support trades have very well understood targets. You're often looking intraday sessions. You're targeting things like shelves of value. And if you're looking at a range with a skewed distribution of value, essentially value not sitting near mid-range, maybe sitting closer to the highs or closer to the lows, these low to high transitions can occur, but understand that we have pushed away from value twice at this point. The market is showcasing that it is unaccepting of this upper value zone. And as we start to get a small relief rally on today's intraday session, we want to be aware that we're coming into a zone of interest for the market, this roughly 460 to 464 area. That could be sort of the ending point of this bounce rally, at which point we need to be cautious of lower highs, sort of that bearish connotation that people are putting onto the market these days. And just understand that we are still holding larger bullish uptrends, but we're threatening them. We're seeing things like breakaways from the 50. We're seeing things like moving averages about to cross. And as we continue to range bound trade, what we need to be fearful of as bulls is the understanding that if we lose key supports, what does our downside look like? Well, as with any range, we can start to project where can we go if the market breaks down. Took it the wrong way. There we go. So let's just say we're using Fibonacci tools. We look low to high or high to low, and we look at the breakdown of this range. That brings us back into where we came from. Essentially, our most recent breakout structure. A return here would essentially be the market backtesting the most recent rally. And while that can be a bit cautionary in regards to the all-time highs of the market, understand that markets like to check back at these zones. Not always do we see the same bullish context continuously. Understand that we can check back before continuing higher. We can also alter this tool slightly and just say, what does it look like if we double the downside range, essentially getting to a 200% downside move? Well, in the case of the SPY, that would bring us down to the 200 period moving average on the daily. Something that, if you're aware, has not been tested ever since the middle of last year. So the market has remained very strong, very bullish overall. But understand that a simple back test of this area is fairly normal for markets. It's a healthy sort of check back. And when it comes to a range breakdown, which we obviously know our range has been established, if we see a breakdown, what does a downside target look like? Often thinking about a doubling of that value range and getting to that downside before things get extreme enough for new demand to re-enter the market, basically to recover on a bounce. So just kind of thinking out loud, what does the downside in this market look like as we start to range trade over the next couple of sessions? But short term, if we're looking at those value zones, here I just have a 10-day, 30-minute, we're still looking at a market that's defending relative support. So catching these bounces has been short-term opportunities, basically stepping into some of the selling pressure as it gets a bit extended from high to low and anticipating that bounce using things like risk-defined option spreads or simply taking advantage of it intraday and understanding that if you get defense here, your upside is defined by this range, not necessarily by the intraday price action. When we look at the Nasdaq, a similar picture starts to form with the understanding that the structure here is a bit different. We know our daily downside has that channel support, that overall trend that has held on low to high transitions. Markets often define these areas based on the reaction that occurs following their suit. Nasdaq, of course, defending the most recent supports. We're seeing the same sort of recovery bounce in the pre-market activity. But once again, where is value sit over the past, in this case, 30 days? Let's also do the same idea here and pull it back to October of this year. A 2-month period. Looking back at where we are today, if you had bought the Nasdaq on, don't see what day this is, roughly the end of October, you would essentially be flat in your portfolio. So understand that this market is not necessarily directional. Once again, we're seeing high to low transitions. Overall, the range here is a bit less defined, but we do have some clear resistance at 400 in the Nasdaq or the Qs. This area has provided sort of the initial response for bears to sell against the dominant uptrend short term and use this as a risk-defined level in order to transition lower. Bulls, of course, are defending the most relative lows and the most recent lows, but understand that if we lose this area, our risk now becomes more evident on the daily and weekly charts. Also noting here that posture of, are we still defending the 50 period? Have we sort of lost this area? Are we threatening a possible back test and failure? Those things are starting to come together shortly. And if we see this signal, and if the market confirms, understand that the market is giving you information. It's worth respecting that information for the short term as we come back into our normal support zone in regards to a trend line and seeing if the market can respond bullish once again. But just like we did with the SPY, and I did it again, drawing it the wrong way, but just like we did with the SPY, let's talk about downside risk. Let's talk about the idea that the Nasdaq could easily double this range to the downside. And when that happens, what will we be doing? We'd be testing the 200 period on the daily. So understand, if we do break down, if that trending structure starts to fall apart, the downside risk here is defined either by the channel or by the 200 period. And that would simply be a relative size range, roughly a 20-point range, breaking lower and doubling its overall range width, which is a very normal behavior for ranges in this market. Finally, last but not least, the IWM. We've come back to our range-bound lows. We've hit them on yesterday's session, and we did see a bullish response. We got a bit of a confirmation signal intraday, along with that same trending activity in the pre-market. But as with anything, we want to treat this range like we do other ranges and talk about upside targets. The volume profile gives us a sense of where value has been in this market. Every time we've responded bullish near these lows, market has often recovered in the period of a couple days and placed us right back at value. So as far as trade ideas go, we talked about the idea yesterday inside of the Bear Bulls chat of a recovery bounce in the IWM, simply taking the same scenario as has occurred many times from an oversold condition and playing towards a conservative target for now. Also understand that if this market does break down, just like any range, we want to talk about the extension. What does a downside break in this range look like? And this time I will use the tool correctly, and I'll talk about downside risk. Let's look at the case where the IWM breaks down. We move away from this value zone for the first time, and we stay away from this value zone, unlike our false breakout look on the most recent attempt to move higher. If that does occur, understand that this range can double. We can be looking at that 161 to the downside that brings us back to a previous reaccumulation zone. And then for a full sort of doubling of the range, a 200% move back down to about 188. So these are some downside targets. The market does break down. Just like any range, you want to respect the fact that we're signaling that breakdown. Market is signaling the move away from value and trying to anticipate what upside and downside targets look like. Now, it's worth mentioning that the false breakout look that we had prior did make it to the 161 extension. So when it comes to looking at previous attempts and seeing where they stalled, a downside breakout, especially with the right conditions, maybe a retest of value, and then that final new low being made, that could easily bring us to a 161 to the downside. That, of course, being about that one, I forgot my numbers already, but that previous target that we just looked at. Move this here, about 195, 196. So if you are still involved in this market, whether it be your long-term or your sort of dominant thesis for the end of the year, understand that we have some structure going on in the market. We have ranges to assess. We have value zones that the market has continued to reject to the downside. And while we are defending relative lows, we need to be looking for that final signal of when is this range going to break and what direction are we going to choose. So short term, there are some opportunities across sectors that are either pulling back. We've seen the likes of staples get a bit extended. But as we are starting to pull back down, we want to see if the previous all-time highs can be defended. We might want to look at maybe some sectors coming into possible buy zones. The likes of financials was brought to my attention this morning. And as we are testing the 200 for the first time in the entirety of 2020, this can provide short-term bounce opportunities. We saw a bit of a hold on yesterday's session, and we do have that intraday gap up coming into a low liquidity zone in the short term. Financials, of course, are covering. We can be looking at our main stocks in play, likes of technology coming to the 50 for the first time. Understand, though, that they once again are range-bound stocks. The XLK is trapped within this upper bound range. So if we do start to lose this area, know what that downside risk looks like. Continue to use those same technical tools and look for the signals that indicate whether the support is holding. Is it holding with enough conviction to get us into value? And if it pushes further, know that resistance lies shortly above. So some things that might indicate that we'll get a larger relief rally today. I'd keep an eye on volatility. We saw a spike on yesterday's session as we did have a gap down inside of the morning session, but that quickly was sold off inside of volatility products, the likes of the VIX and the VXX seeing that upper wick on yesterday's session. Volatility remains, I would say, relatively elevated. We're still above our 20 print inside of the VIX itself. But additionally, we often do not see this posture of more defensive volatility structure when it comes to high to low transitions. Usually the VIX will spike. We might see a secondary sort of rally, and then we see a collapse. If we're doing this again, we would like to see this secondary spike basically be the high for the time being. And if you're bullish in this market, a breach of this area might be a bit of a red flag that there are some more risk parameters coming into the picture. Our bond market trapped at gravity, or in this case, value in regards to the TLT. Not really seeing a lot of dominant directional conviction here as the market continues to be, once again, range-bound trading inside of this range high, range low, and then our lower high structure more clear with recent inflections. And then our dollar, still elevated. Understand that in this posture, the dollar is putting some pressure inside of the equities markets. Not necessarily all equities are affected at the same rate, but when it comes to things like commodities, along with some inflationary-based stocks, the dollar strength can put some short-term pressure on these and provide some of that poor market breadth we've been seeing in regards to a bullish stance. All right, and last but not least, I'm looking at crypto in regards to Bitcoin. We did see a bit of a breakout yesterday, bit of a short-term move away from a dominant channel structure. This can be seen on the futures chart, the likes of this short-term downtrend finally breaking bull. And that, I believe, is somewhat due to the support bounce in the small cap or risk on sector of the market. You can also see this much more clearly inside of the asset class itself, the likes of BTC USD. We did have a breach here, but understand that all we've done is get out of our short-term falling wedge and run right into our dominant retracement resistance. So market is showing that little bit of recovery bounce. We still have a ways to go for certain bull postures in regards to different asset classes, but you can see that the correlations in this market still remain fairly strong. IWM being one of the key risk on areas inside the equities market, it's worth noting that Bitcoin topped on November 10th. IWM topped on November 9th or 10th. So we have the same sort of high and timing of Bitcoin as we do IWM. We're also seeing the actual dominant lows of the IWM defending, and the first real signal of a bullish breakout inside of the Bitcoin asset itself. So those high correlations remain. It's simply the market condition that we're given, maybe not the market condition that we want, but understand that these are signals. They give us a clue as to maybe short-term trades. And before those signals occur, understand what your risk profile looks like. Understand these range structures remain the dominant thesis in a lot of markets, some of which have formed more recently. Others have been on the charts for a long time. All right, last but not least, just showcasing the market breadth here coming down, finding some possible bottoming action as the market itself recovers. But wanted to also highlight the Nasdaq breadth. This is kind of a risk area that I believe is still trying to find its recovery. The Nasdaq, of course, dominated by larger tech market cap names, communication names, and consumer discretionary names. What's been the challenge more recently is that the Nasdaq breadth overall, from the Nasdaq 100 perspective, has been relatively poor. So while the larger market cap names are hiding some of this poor breadth, it does provide a bit of a downside pressure. What's great about looking at this perspective is if we can see a bit more recovery in this breadth, along with our market cap leaders holding or continuing to be bullish, then ultimately the Nasdaq can be a strong area of outperformance moving forward. But what's been happening is we've seen short-term corrections in our larger market cap names. These high to lows have been printed, and we're starting to see the possibility of daily downtrends forming, basically the structure starting to break down slightly. We've even seen some of our more resilient names coming back to test lower supports. Once again, that posture here, just being aware that we're getting less and less conviction from bulls buying the uptrend and losing moving average support. Some stocks, of course, not necessarily bullish at all. Looking at Facebook, trying to recover from the 300 recovery bounce. Lots of chop in regards to the moving average clarity, but you can see that sort of risk inside of a stock like Facebook if things start to fail. And with the Nasdaq as a whole, if I pull up just a quick heat map to show this concentration, essentially these 5 to 6 names are the reason we focus on them so much. They comprise more than 50% of the entire market cap of the Nasdaq. So if you are trading the Qs, if you watch these stocks, they do correlate in regards to what these larger names are doing, especially if they reside within the same sector, and especially if they reside within the Nasdaq correlation intraday, whether it be bullish or bearish correlation, buying or selling the Nasdaq as a basket of stocks, as opposed to individual names outperforming. So something to be aware of as we move into the rest of this week. We have a bit lower volume overall in the market. I do believe that's going to continue into Thursday. Watch for maybe oversold names to start to get a bit recovery. We saw a little bit of that in Friday's session. These are names that have been in clear downtrends, but are starting to just barely breach higher, finding that lower bound support. A lot of these names are going to be tied to stay at home. But additionally, we can look at names that simply have fallen from their relative highs and look to see if we can catch these bounces on their way back to pullbacks. Apologies, just looking at the chat room. Well, when it comes to normal volume, we can say inside of this range, we've been getting some elevated readings. But when you're looking at trending activity, you can see that the volume is steady around 50 to 60 million. So over the next couple of sessions, if this volume does start to taper off, know that the range can sort of hold inside of that, but we can get a little bit less conviction for the market to make a decision one way or another. You may also want to look at the ES to see those volume profile standards. Higher volume from high to low, higher selling volume inside of the range, but lower volume when you are transitioning. This is fairly normal for a market. It just shows a lack of upper supply until you reach your upper bound, and that's when you usually see the selling spikes. Now, one final note, we are seeing some short-term news regarding the build, let's see, what's it called? The build, I forget the full title, Build Back Better, Build Better. Build Back Better. Couldn't remember the order of the words. We're seeing some volatility there. It's obvious that the politicians are not in agreement as of yet on how that should be structured. So we can see some speculation start to be basically removed from the market. That speculation can cause some volatility short term. Know that also affects market breadth as well. If anything is recovering based on a more speculative posture for this to be passed, that of course can be disrupted very quickly with new information. So with all that said, come into the market with a perspective of not bullish, not bearish, more defensive. This market has yet to really make a clear decision one way or the other. We're seeing the ranges form. We know the edge in regards to ranges, the high to low posture, taking risk-defined trades based on those attempts to hold range, and understanding that if we do lose range, that signal is indicative of a breakdown or breakout. If it holds and confirms, know that the market is ready to move, and whatever direction it chooses is going to be sort of the dominant posture moving forward. So with that said, my name is Jared. This is Engineering the Market. Reiterating a lot from yesterday, just trying to clarify some of the posture that I've been alerting people to. Obviously, not going out there and saying we're done, the market is over, the bullish trend is over, but this range is something that needs to be respected for now. We probably need a new signal, a new catalyst, and maybe some clarity from some of the risk factors in the market to lead the market higher. At which point we want to play the range while it exists and protect ourselves in the case that this range breaks down. So stay safe, trade well, stay tuned for pre-market prep, and we'll talk more tomorrow.
Thor? I cannot hear you.
There we go. Hey,
There we go.
everybody, how's it going?
Good morning.
Good morning, Norm. How are you doing, buddy?
I'm doing all right. How are you?
Oh, I'm doing well. Had a pretty fun trading day yesterday, although it was definitely an interesting day. Today is really interesting the way it's gapped back up. I don't know what to make of this market this day, but
I
Jared's
tweeted
engineering
out
the
a
markets was really helpful. But
a couple of hours ago. This market's like a ping pong ball, man. It's quite wild. I wasn't surprised at the gap up this morning, considering how much we were down yesterday, and it was bought back up pretty heavily. Even though the day ended red, it was still substantially off the lows, so I wasn't surprised to see it. I played that bounce yesterday on a couple of things, and
nice.
so it didn't surprise me. We'll see how this holds. It'll be interesting. I don't know that we'll be up 1.1% on the Qs when we end the day, but we'll see. Let's
Yeah, I mean, if
see how it
maybe we
unfolds.
rally a bit, to start the day off as everyone gets really excited, and then we turn over and give back most of it, if not all of it. That certainly seems like something that could happen. I know Jared was talking a lot about like the ranges everything's in right now, and I think that's a lot to pay attention to as well. So, I mean, we do have some stuff moving around today. Our gappers up list actually has a little weight to it today, no surprise, since the market itself is gapping up. And then our gapper's down much smaller, but we do have a couple of names out here that I've seen before, so it'll be interesting to see if we can find anything interesting in what's moving against the market today. Otherwise, we had the SPY, as you guys can see. We were talking about Jared talked a lot about it. Engineering the markets has retested this low of this range, and I really liked what Jared said about paying attention to what it's really done in the past 2 months or 3 months. Basically, if you had bought shares and then woke up today, you basically be like, oh, cool, I've got like a percent, or 2% in my account, So we've been chopping this major range for a while, which is why the market's been a lot trickier to trade, especially for newer members who are less experienced in choppy action. That's what's made things difficult. So let's, before we get out and start looking at this gappers and do that, let's pop over to the Pulse, find out what's going on out there that's of note today. Norm, what you got for us today?
Yeah, there's really no interesting economic data. That's why that is blank. We've kind of already described everything going on in the market. Um, you know, uh, Jared mentioned it, but the couple of things we've got to bounce back on Bitcoin, just bounce back on the market overall, really right now this morning, and a lot of the stuff on our gappers list is either travel sector related. So I think as we get more and more um, info on the new COVID variant coming through. I mean, everything that I can see, and I'm no epidemiologist. I know half the population of society is these days, but if you just look at graphs and such, and the data out of South Africa, where it's been originated and been for a little bit, they seem to have peaked in new cases, and that's starting to come down. And all the same time, it's been a few weeks, and um, hospitalizations and deaths aren't up. So that's potentially good news on that front. Maybe people freaked out a little bit too much Monday about that. So we've got some of those popping back up in like the travel sector and such. And then the other thing about the travel sector is a lot of them cruise ships and such were down huge yesterday morning on that, and then actually rallied back to green. And then the bill going through the Senate, the $2 trillion package that was straight up said to be dead on Sunday. It's probably still dead, but they're trying to breathe some life into it somehow. So that's popping some of those alternative energy plays and such as well.
Oh, thanks, Norm. Man, that's actually some a lot more interesting information than I thought we had going on this morning, to be honest. So that's awesome. Thanks for that. I was just taking a look at NCLH and CCL as you were talking about that, and their daily charts look very interesting for sure. On
Yeah.
those otherwise weekdays, look, they bought up real nice, and today find themselves making new highs. So I made money yesterday playing the sell off on CCL, and I have to admit I felt like I was home trading my good buddy again. It's been a while since I've had a nice moving day with CCL, so I had a good day. I definitely slept well last night, thanks to my buddy. So let's go ahead and do it a little backwards today, and let's hit the gappers down list first, since there's only 3 of those. And let's go ahead and clear off the old list here, which, you know, maybe we'll leave the Bitcoins on there just because I think those are going to just be fun to look at. And I have a feeling most of these will be there, so I'll leave those there too. All right. Let's start with NVAX, as I said. NVAX is been on the list quite a bit. Yesterday, NVAX sold like crazy. Now, if you had listened to the pre-market show yesterday, you would have heard a plan put out. Not saying I said that, but I might have said that NVAX was at this really extended range near R3 on the daily, and I'd actually look for it to come inside the range again and come back in and run back in, since we had other stuff going on with other vaccines of more note. Sure enough, huge move that day. Opportunity for a big sell, so that'd have been a good one. Hope somebody got that. I didn't. I played with CCL, but I hope you got a piece of that one. Today, looking very interesting to see with the news coming out. This could be one that actually continues to play against the market. If the market rallies off of these lows, you know, NVAX, for instance, a stock that, you know, may not do as well if the variant isn't as serious, you know, may sell off, right? So this will be certainly an interesting one to take a look at. Let's see here. We have ADGI. This is Adagio Therapeutics. Not a huge fan of this one, so we'll probably just move off. Big volume signature a few days ago, but most of the time this stock trades horribly. So I would just have trouble getting into that one, especially with all of this to look at. AERC, again, not a huge fan on this one, although I think this one IPO'd not that long ago. It really moved around a lot after when it IPO'd, but then it found value. We did have a big move on it yesterday, which may provide some kind of a potential opportunity maybe, but wouldn't really be my bag. I'm not going to put this one on the list, but if you guys end up wanting me to look at this, guys and gals want me to look at this one later, let me know and I will. All right, let's look up PPSI. Which is Pioneer Power Solutions. This is what Norm's talking about, EV plays, right? Or alternative power plays getting the little bit of a pop?
No, this is
different?
on a new order that they got that they said that's going to substantially impact their accounting for next year. So
cool.
That's
all
what
right.
they're popping on.
I like that. That's a really nice catalyst. Those are some of my favorites. So if you were
keep in mind the low float, 4 million shares.
Yep.
So.
Yeah, that's what I was going to say. If you're looking to play something in the lower float category, PPSI, and I'm going to have a lot of trouble thinking that's not Pepsi. PPSI may actually provide some opportunities for you. Keep in mind, I mean, 4 million floats, that's pretty low. Sava, Cassava Sciences on the gap today. Really wide candle for this gap. Decent share volume, is moving around in the pre-market. What we got on Sava today? Anything notable?
Sorry,
37
watching some massive truck barely avoid hitting a light post in front of my house.
Oh my god, that sounds hilarious.
Sava's been up here. I hate this stock.
Yeah, exactly.
There's some Reddit stuff about some Reddit rumors article going on there. So
all right, we'll leave this down in the extremely low maybe category. BFRI, Biofrontera. I do not like the way this stock trades generically. You can see I think I talked about this one yesterday because it had weird topping tails all over the place. A stock with that much topside pressure popping through like that and then selling down, I don't even know where you'd get started on this one, so I'm moving on. ERJ, Embrar. That's not right. So ERJ here, bad volume, big gap though. What's our float on this one? 173 mil. So I mean, it's got a float. It's nicey. We do have shorts available to on IB. So
Brazilian aircraft manufacturer Embraer. They're spinning off their air taxi unit and going to, I believe, be listed on NYSE as well. So that's what it's popping on today.
I don't know. I haven't played like a spin-off like that. So I don't really know how those generically play.
I've seen it at times. I've seen it trade okay. It's not the best. I don't know how it'll do.
All right, now I've seen in the room already a bunch of people talking
Earnings
about
on
MU, and I can tell why. Look at this thing go. All right,
we're out of
MU is
earnings
gonna be
seasons,
fun.
but they like to report crazy late. Their earnings calendar is not the standard quarterly deal.
I like it though. All right, so MU looks fun. I'm gonna be watching MU. We got earnings, huge float on MU naturally, massively institutional. NASD. Let's see here. We should have shorts. Yeah, we have shorts. Let's see how the spread's running on MU. Spread's under 10 cents today, which is not bad. You can work with that on a $90 stock, although it would be nice for more volume to come in and the spread to tighten a bit before we start playing with it. But we were talking about MU the other day as it was sitting near VWAP, and look at this thing. Came down to the average price, held here value. Now, big gap up with the earnings news. So question is, do we gap and go or do we gap and fill? And I have no idea on that one. I do know we're at the extension of this topside range already and trying to break out. So if we're going to retest, it should not be a very deep one if we're going to get going. If we start to give up too much ground, I'd start to think maybe we're filling. So be careful on MU today, but definitely should provide some opportunities. Mara getting its Bitcoin bounce on. We're going to have Mara, Hut, and Riot are all just down here in the little Bitcoin category because I know they're all going to be on here at some point or another. You can see we had lots of indecision yesterday, low volume, but we stuck above S4, which was good today, gapping up. And if you look at Bitcoin, you can see why. Bitcoin bought up pretty well yesterday, and then today finds itself starting to push a little bit. So it'll be interesting to see if Bitcoin can regain the average price and get through like 50,000 and start getting its move on if something starts to happen. Should be fun. If something like that should happen, then Mara, maybe even like Riot. I don't like Hut at all, but maybe Mara or Riot will provide you an opportunity there. Okay, BKKT. Backed. I don't really like its daily chart a whole lot, although I do like how we sold down heavy into a value area here and really set value, and then we've been indecisive there and now kind of pushing a bit, but we would need volume and lots of it, and we don't have quite lots of it yet. We're down to about 34 million float here. Average range on this thing's only a couple of bucks. So, might provide an opportunity if you're into these, but right now I'm not seeing the volume. So if the volume comes in, we'll go for it. Here's
they did announce something about cryptocurrency. So they had a catalyst this morning. It was a little bit unclear. This is kind of a garbage ticker.
I'll throw it down here with the Bitcoin stuff. If somebody wants it, we can analyze it a little bit more, but I think we'll be good. SOPA, this was the one, like a lot of people were talking about this one yesterday. They got some really good moves on it. I didn't have it on my radar at all. I don't really know how you got a big move. I mean, oh, here it is. Oh, there it is. Okay. So right here. Yeah. Okay. Especially if you waited for the volume to come in. I mean, this thing moved. So that's cool.
I think Brian traded it just because he liked saying SOPA.
I'm pretty sure that was the only reason. So the question is, what do we expect today on it? Obviously, yesterday we had a really big day on this one. So we really kind of got see what our expectations are for it today. Personally, with the big move, we're going to have a fairly wide range today. So most likely to maybe push a little and then sell on a day after a big move like this. But we'll see. I mean, if the volume comes in on this thing and it looks really strong, it might give you an opportunity. 12 million float So keep that in mind. A little low. So yeah. All right. Let's go to NKLA. Alternative energy, NKLA. Nicola has been stuck in this range forever. And for me, I wouldn't really recommend attempting to trade this one until it does something. Right now, as you can see, we've just been range bound with maybe like a very, very small move. I mean, you're talking 73 cents, maybe $1, couple bucks. You're getting out of this thing on a day, and it's just going to chop you up. It's not trading well lately.
I will say Nikola has its own catalyst on top of the other stuff we described, which is I guess they've come to an agreement with the SEC to settle their fraud charges for the low price of 125 million, which seems like a lot, but considering they lose almost $700 million a year anyway, what's another 125 million between friends to get some fraud charges off your back.
My goodness.
Now they can start pushing cars down hills again.
Yeah, make a YouTube video. So I don't know, is confidence so broken in this company that even this won't help it? Who knows? But I would wait until that happens. Like if you get a bunch of volume coming in the morning, you get some like new highs, it really looks strong, then maybe you go for it. But this is not something to get too excited about, at least not at the moment for me. I just lose money. XPEV, really ugly 1 minute chart, which is not completely unusual for XPEV. XPEV getting really far, all the way down to VWAP, which we've been kind of eyeballing this thing for a return to VWAP, so it made it. Threw a bit of a hammer there, now gapping up with the market a bit. Not sure what's in store for XPEV right now. We have no direction really as far as the charts are going, so we'll have to just let this thing open and see if it pops onto a scanner or something like that. Anything notable there? No, or is that one just
nothing special? I see.
EQNR could have a worse 1 minute chart, but I'm not sure how. It is gapping up on the daily. It's a 1 billion float, so I mean, in that concept, it's a nicey stock though. It is above R4 and it is on the move.
It's trash. It's out
but
of
it looks
Norway.
horrible.
Yeah.
Okay, good.
Not even
All right.
worth looking at.
I'm not going to look at this one because I don't want to say it.
It's popping on oil, and there's other stuff you can find to trade if you want to trade an oil name.
Oh, right on. Yeah, I agree with you, Prince Trader, by the way. CCL on main for me today for sure. Plug is getting really far below VWAP on the daily, but it still hasn't thrown like a downside buy signal yet. So I still don't know, even with everything that's going on, if Plug's got the love yet. So we'll have to keep our eye on it. But right now I've got no volume pre-market, and I do have a bit of gap up, but it's probably just tied to the market. I don't have any confidence on this thing till some serious volume comes in. When this thing was trading actively before, you could expect 80 million shares in a day. Right now, you're averaging like 20 million or less, and that's just not getting it done. NVIDIA, let's see. NVIDIA has been trying to bottom here on S4 on the daily, this range, and it looks like it wants to make a pullback to value. And then if it does, maybe we can get this thing to run its daily range. If tech happens to bounce, right? NVIDIA's had fairly decent news, and that's caused it to go into a really nice rally, but it found value. And you can see how large order sets establish value over time. I mean, look at this thing. Even as far back, right, as here, you can see we have this large volume area that happens right here. And look how that has dictated, right, over time, what has become value on this over the past 2 months. And then just shows you how the large orders, right, are really setting value. So we've set here, tried to get away, retested, tried to drop under. So the question is now, are we going to do what Jared talked about earlier, where we're going to start looking at some rejections of value? So we're going to start losing key levels to head back towards VWAP, lose S4, or are we going to squeeze with a strong market today and return to value? If so, NVIDIA could provide a really nice opportunity for a bounce play today if that comes in. Would love a little more volume, but NVIDIA often doesn't trade with good volume in the pre-market, so I'm not going to let that one hold me back. I'm likely going to put NVIDIA on my main today, just because
It's
I
not
kind of
bad
like the way
volume
that looks.
for a $300 stock.
Yeah, exactly. And it's it rarely has like huge volume in the morning, before it opens anyway. All right, we're doing pretty good here. We got a few more to go, and then we'll pop over some announcements. Futu, meh. No. Pre-market not great. Daily actually does look a little interesting. I like the big volume pushed in, and then the consolidation day now today slightly gapped up. It might be worth leaving on your secondary if some volume comes in. 82 mil. I've never successfully traded it that I'm aware of. I don't know if I've ever actually taken a trade on Futu, so I'm not really sure how it trades intraday. It looks like it has some moves, so it could provide an opportunity for you. So I think we already looked at CCL and NCL. We kind of briefly looked at already. They both look almost the same, which is when the market sold, they actually rallied a bit. And then when the market bounced, they really go. Now today they're gapping up a bit. So CCL and NCLH definitely going to be a spot I'm going to be looking today. Let's see. Oh, AMD's on. And we'll do AMD, Neo, Ribbon, Telaroy. AMD is on here, getting a little bit of gap going. It looks a lot like NVIDIA, doesn't it? Chart-wise. So we find ourselves holding this lower extended area. Now the market's bouncing. So if we move back into tech, maybe NVIDIA and AMD provide us some nice opportunities today. TLRY, I really don't care to trade very often, and you can see why. Again, yesterday, just very poor candle structure. I wouldn't recommend this one unless some serious volume comes in. RIVN, yeah, I don't know. I don't really like Rivian as well. I don't think it trades well intraday, but we do find ourselves under 100 and trying to hold this area. We did have decent volume, and now we're pushing lower on lower volume, which kind of shows a bit of a struggle to sell. Maybe we have a return coming up, but I'd say today there's better stuff out there. And then our buddy Neo. Neo's been selling for a while. Really far below value, really far below the average price paid for this thing. The question is, are we at the bottom yet? I don't think so. So I would need to see some kind of really large buy signal to make me think we're done. So right now, I'd probably stick away from Neo. It's been providing very lackluster trading days for maybe the past month. So unless something really kicks on it and it really gets moving, I'd stay away from it. All right, so let's go ahead and get ourselves over to some community events, talk about that. I know we got a short week this week. Norm, what else we got going on?
Yeah, short week. Tonight, you've got Eamon's Trend Trading webinar. That's at 5 p.m. Eastern. Note the special time due to his time zone. And then next week on Tuesday at 8 p.m., Artie's going to be talking about hedging strategies. So check that out as well. Just a reminder, I know people are traveling and such around the holidays. All these are recorded and available for later viewing if you can't make them on those scheduled times. Creda's webinar on FOMO and overtrading, that will be tomorrow night, 5 p.m. Eastern. Once again, special time due to her time zone. And then for the psychology next week, right around the holidays. So just kind of a fun gathering. Mike just wants to rub in that he's near a beach, I think. So just a reminder, super chats, super stickers going to be donated to Shriners Children's Hospital. So anything for December will go toward that great cause. And if you have not checked it out, check out our free web-based simulator application at stocktradingsimulator.com. Stocktradingsimulator.com, sorry. If you're watching on YouTube, haven't been in the chat, you'd like to try it out, you can go to bearbulltraders.com, scroll about halfway down the page. You'll see that test drive now button. It will only bill you once. Use the promo code PreMarket24 to get a discount on that. It is 7 calendar days, one week, 7 calendar days, 5 trading days in the room. Reminder, you don't get an extra day for the market holiday, so it still will be 4 trading days if you were to get it today, but nevertheless. And if you want to take advantage of the discount we have going right now for Elite Annuals, it's Holidays 40 is the promo code there. That includes a month of DAS Simulator with replay included, which is a $165 value in itself as well. So.
All right, thank you, Norm. I appreciate that. We have a little bit of fun going on Apple right now. So and a couple of them. So everyone. So
that's just an out of sequence print from yesterday at the close.
Exactly. I was just going to explain that. So unfortunately, this is just called a chart buster, y'all.
Yeah, it will screw up your charts.
So it has no relevance whatsoever. But what's happened? There's actually some platforms that will allow you to filter these and get rid of them. Not something in DOS as of yet that I'm aware of, but hopefully. But basically, what's happened is a print from a different time frame, or all prints have to be recorded across the tape. So they send it, but if you go to your time and sales, you can actually add what's called the flag code to it, and you can see that print will come in, and it's probably got like a flag code 7 or a flag code 9 or something like that, which just shows that they're out of order, out of sequence prints that are being recorded. And unfortunately, when the DOS records those, they become what we call chart busters. They just completely ruin your chart. So you got to wait a few minutes for that thing to get out. Luckily, they normally happen pretty early like this, so by the time they open, it's normally okay. Sorry. So
those are really easy to pick up too. You know, even without having to go to that extent. I mean, you're going to get block trades that happen at all kinds of different prices. But if it's something like that way out of whack and it prints at previous day close, like Jared said, that is a clear indication that was an out of sequence print from the close yesterday that just got recorded this morning. So,
yeah, exactly. All right, so let's pop over to our buddy the SPY here and see what we've got going on. So SPY still continuing it's a little bit of a push, but basically if you zoom out, you can see once we hit around like 6:30, 7 o'clock, we kind of established pre-market high. We've been kind of selling and then just kind of chopping this new range that's been created up here. So it'll be interesting to see how the SPY itself is going to respond today, and pre-market high, and then probably what is it? I think this is a previous low, if I recall. Yeah, 2 days ago low, 2 sessions ago low, is at 458, and it looks like we're establishing a range right between these. So this is going to be the main thing. When I watch the open, especially, this becomes the main range that I'm concerned with. Is this, and when the SPY gains this range or loses this range, right, this is when I'm going to start looking for really good trades that can trend, or look for it to break and reject. Any of those big lines in the sand where we can really see if something's going to happen, that's where we're going to be focused. So let's go ahead and go ahead and throw out some tickers, everyone, in the room and in YouTube. I know we got stuff from the gappers. I want to see what you all want me to focus on specifically. If they're ones we haven't looked at already, much the better. I like Zoom from the room, SQ from the room, one more from the room. All right, PFE, I'll take it. And how about YouTube land? What do you guys want to see over there? I'm not forgetting you. All right, we got AMD. We'll look at AMD again because I definitely want to look at AMD. Let's see. We had LCID. I like that. Thank you. And you want to take SOPA had a wild day yesterday, so we can take a look at SOPA one more time. All right, cool. Got some good stuff from you. We'll hit Sava on there. Or I think we looked at, yeah, we got Sava down here. We can take a look at those lower floats here. All right, so SPY, doing SPY things. Let's see here. We have Zoom. So Zoom, we've got no pre-market volume, but that's not unusual with Zoom. Zoom kind of like NVDA or even like a Microsoft or Facebook. These stocks generically, unless they're just in an extreme catalyst, will not have pre-market volume hardly at all. It's just how it is. So Zoom had a really nice buy up when as a pandemic play, if you will, as variant news kind of came strained and some other things happened. But then now finds itself in a period of indecision, right? As it kind of as these folks who have just bought in are waiting to see, does this confirm, or like Norm was kind of briefly talking about some of the the information coming out of Africa right now, puts it at a high transmission but lower strength or whatever, so that, which could be beneficial, which if that happens, then these plays that started to initiate on stocks like Zoom may be unwound, right? They may decide, hey, we're going to go ahead and sell them now because now we don't expect them to go. If that happens, Zoom could actually see a continued move down. But one thing about Zoom is it is in a good value area. It finds itself very far away from VWAP, right? It finds itself well under VPOC on the greater time frame. So if there is value to be seen here, we're certainly in a good spot for it to get bought for a return just to the average price, much less past it, right? So this could be in a good area. I like that we're near $200, which I feel like is a fairly psychological number, right? So will the $200 provide the resistance, or does that become something supportful that we can stand on, right? I don't have it on, Gene, but I'll throw it on there. Well, let's take a, we'll add that on there to take a look at it. Let's hit SQ. SQ for me might, there's a couple of stocks that may be worth noting. SQ, PayPal. In the room, who else, or Norm, who else has high like Bitcoin holdings in their portfolios? These might be stocks to look at since Bitcoin's bouncing a little bit today. You may want to look at some of these kind of stocks that actually have a Bitcoin holding as a part of their diversification portfolio, right? Since Bitcoin's bouncing a little bit these days, often that actually increases the fundamental outlook for that company. So investors will actually start to come in and take some positions on those. So if you see, so I think SQ falls into that category. So you may see an opportunity arise in SQ being very undervalued if that occurs. But we will we'll see. All right, PFE. PFE, very interesting. So PFE is in a really interesting spot today. PFE will definitely end up on my primary list. So what I like about it is that PFE went into this area and then it set this high volume and decision here yesterday. Tried to push but struggled to do so. Today, finding itself actually gapping down and moving away from the trend from the news of the market. I really enjoy that look. If the COVID news becomes a little less worrisome, right? That again, this could just be one of those moments where people decide to go ahead and get rid of some of these positions. We are right at R4, which is an extreme reversal area that I love to trade. So I'm definitely going to be looking at PFE to see if we get maybe a little chop at the open and then a big rejection and let this thing come back down into range. That should be a lot of fun if that occurs, because value on this thing all the way back down near $50, $48. So we could get a really nice return back down to this broader accumulation range, or like Jared talks about, this bigger shelf down here, which would be a lot of fun. LSID here already found itself pushed to R3 and rejected today, which I don't like that. I think LSID looks like it's going to be choppy today, just on the quick look. We find ourselves in a pretty wide cam range, and we're already at the top of it. So the only thing I could say is if we get a bit of a rally on it, you could look for it to sell and maybe get a downside move through PDC. Down towards 37, but you're only going to get about a buck or so out of that move, maybe $1.50. So I just don't know if it's worth it. LSID has these really small candles, like I've been saying lately, and it just really hasn't been providing the trading opportunities. Okay, SOPA, you wanted to look at again. SOPA had the big volume yesterday, and that is something worth looking at. We had a lot of traders played that well. Big flow. Sorry, hold on. Where did we go? Where did you go, SOPA? You're not on here anymore? Only a 12 million float on this one, so you got to keep that in mind. But if this thing starts to push, I think it actually came off the gap up list because it's been selling back towards previous day's close. One thing I do like is that we've sold down to previous day's close. So we're going to get a really nice line in the sand here at the opening on this one. So this one, if you want to play a low float, this one actually could be a fun one to play. No shorts available on IB, however. So I would not put this on my watch list only because of that reason. I don't trade any stock that doesn't give me the option to short it. You may be able to locate them, but with such a low float, that might not work. So keep that in mind. But otherwise, definitely in some cool places. I'd be looking for PDC to play. If PDC, previous day's close, holds, I'd look for a return to VWAP and a move through. It could be really fun. If it gives that up, then who knows, right? I mean, you could sell this entire candle today. So it could be crazy. So, all right. Nike getting a little life, gapping up a bit. Nike, I actually like the chart here a bit on the daily. We've been doing nonstop red candles all the way down to about 155. The only thing I don't like about the daily is I would have loved to have seen a much larger reversal signal. So my point being, look at Nike here, right? Look how we got this large order and how that's kind of set this value area right here, right? After that, we consolidated for a bit and then we went on our big run. And I like that, but right now we're kind of bouncing and we're gapping, but we're doing that without, right, any volume signal that we should be doing that. So we're gonna, I don't know how much strength this move has. I do notice that we have like this bottom of this level, like right cutting through here, which is going to be a broader value range. So maybe we squeeze a bit today, which could be a nice opportunity. We could get a nice run today, but I wouldn't expect more than maybe like $4 or $5 out of it. But it could be interesting otherwise. So yeah, I'd keep an eye on that. All right, let's oh, thanks, Jeff P. MSTR. Yeah, that's one of the ones I was talking about, right? So let's look at that one real quick. See if it's doing anything. Oh, I messed that one up. MSTR. Thank you. So MicroStrategy is one of those companies. Its pre-market is always horrible. But notice, look at its pattern. See how it almost looks like, let me go to Bitcoin. See Bitcoin, how the pattern looks? Not 100% identical, but you have a very similar bottoming look to it, right? And that's because stocks like MSTR have huge holdings in their portfolios of Bitcoin, right? So if Bitcoin drops, the company's evaluation and fundamental actually changes. So as Bitcoin's been downtrending, so has MSTR. When Bitcoin was uptrending, MSTR uptrended. So even though this isn't a Bitcoin miner or something like that, companies like this, PayPal, and otherwise can often provide opportunities because of that. Oh yeah, Ahmet, I would not trade this one. The spread is unbelievable. I can't afford to trade a $600 stock, especially with this spread. Yeah, word. All right, I'm going to pop over to the moderators' watch lists and see what everyone else is looking at today. Looks like not as excited. I like Simon's list, which is the only list. We have AMD, AMC, and PFE. I like all of those. So Simon is going to make money today. I can tell you right now, just by his list. And Simon always makes money. Watch list, Apple, AMD, MU. If you haven't had the opportunity, by the way, guys, that free stock trading, our simulator that's been coming out, one of the really cool parts about that is actually not even the trading simulator. It's the homework assignments. Simon and Eamon put together these weekly assignments that they email out. And so it tells you it would be something like if you want to learn a particular pattern or you want to learn something, all of a sudden you get an assignment that says, hey, if you want to learn this, go to this chart at this time and you can practice it. It's really neat to do. And I don't know if anybody's doing that anywhere, but it's really cool and really appreciated. DEMA, Apple, AMD, MU, word. Apple, MU, NKLA for Peter in secondary, Pfizer, and RAD. How did I not get RAD? I love RAD. I mean, when it has its days. This is Rite Aid. I've had a couple good trading days on Rite Aid. I mean, it was like a year ago. That's cool. All right. I like it, Peter. Brian Pesum, I could have already told you TZA, TNA. You're looking at PPSI, which you're going to have trouble not calling Pepsi all day. and PFE, ACAD, and REIL for fun. Also for fun, PPSI and SOPA for Peter. Here comes Jared, hot off the presses. I want to read his notes as well. Markets holding lower range support, so acknowledging that a bullish move today can continue all day from lower support zones. We'll be watching for a mid-range rejection in SPY and Qs. IWM looking for VPOC or any failure of gap up trend. Word. For stocks, he's watching Tesla, Mara and Riot for bit plays, and AMC. Secondary, he's liking Sava, MU, and Nike. All right, everybody. I'm gonna go ahead for me. My watch list today is I'm actually gonna be watching the SPY. I'm also gonna be watching the travel stocks, CCL and NCLH. Look a lot of fun. And then we're gonna round that out with AMD and MU. I think all of those are going to provide amazing opportunities today, so I'm just going to sit back and wait for one of them to happen. As far as everyone out there in YouTube land, thank you so much for coming and hanging out with us this morning. I hope you guys got some really valuable information that you enjoy. If you did, please do me a favor, throw us a like, subscribe to that channel, ring that bell, and we will see everybody on. Remember, short week this week, but we still do have a couple more sessions coming back to you, and then after that, Carlos is back. So, and I know everyone's going to be looking forward to that because he makes this whole thing look a lot fancier than I do, but I appreciate everyone sticking with me as we get through the couple of weeks while we get this done. Hope everyone has a great trading day. Remember, be patient and trade well, trade safe, and don't trade alone. I hope everyone has a great one. Norm, have a great trading day today, brother.
You too, man. Take care, guys. Trade safe.